The anchoring effect, I mean, how do you deal with that as well?
Well, we're not anchored to what we're ignoring.
Ah, I see. A question for both of you is related to psychological biases. Through Berkshire Hathaway's operations, you get a very good read on macroeconomic factors, yet Berkshire does not make investment decisions based upon macroeconomic factors. How do you control the effect of information, such as knowing macroeconomic factors, or the anchoring effect of knowing stock prices, because after a while, it's hard not to once you've analyzed them before? And how does that influence your rational decision-making, whether you should ignore it or whether you should try to use it in a positive way?
Well, Charlie and I are certainly, we read a lot, and we're interested in economic matters, and political matters for that matter, and so we know a lot, or we're familiar a lot, I should say, with almost all the macroeconomic factors. That doesn't mean we know where they're going to lead. We don't know where zero interest rates are going to lead, but we do know what's going on if we don't know what is likely to...
Warren, there's a confusion here.
Oh.
It says microeconomic factors.
Oh, micro.
We pay a lot of attention to those.
Oh, yeah.
If you talk about macro, we don't know any more than anybody else.
Yeah, he summed it up. In terms of the businesses we buy, and when we buy stocks, we look at it as buying businesses, so they're very similar decisions. We try to know all, or as many as we can know, of the microeconomic factors. I like looking at the details of a business, whether we buy it or not. I mean, I just find it interesting to study the species, and that's the way you do study it. So I don't think there's any lack of interest in those factors or denying the importance of them. So am I getting at this question or not, Charlie?
Well, there hardly could be anything more important than the microeconomics. Yeah. That is business. Business and microeconomics are sort of the same term.
I guess
microeconomics is what we do, and macroeconomics is what we put up with.
Yeah. The anchoring effect, I mean, how do you deal with that as well?
Well, we're not anchored to what we're ignoring.
Ah, I see.
But Charlie and I are the kind that literally find it interesting in every business. We like to look at micro factors. When we buy a See's Candy in 1972, there may have been 140 shops or something. We'll look at numbers on each one, and we'll watch them over time, and we'll see how third-year shops behave in the second year. And we really like understanding businesses. It's interesting to us, and some of the information is very useful, and some of it may look like it's not helpful. But who knows when some little fact stored in the back of your mind pops up and really does make a difference. So we're fortunate in that we're doing what we love doing it. I mean, we love doing this like other people like watching baseball games, and which I like to do too. But just the very act, every pitch is interesting, and every movement, whether the guy's, a double steal is interesting or whatever it may be, and so that's what our activity is really devoted to, and we talk about that sort of thing.
We try and avoid the worst anchoring effect, which is always your previous conclusion. We really try and destroy our previous ideas.
Charlie says that if you disagree with somebody, you ought to be able to state their case better than they can.
Absolutely.
And at that point, you've earned the right to disagree with them.
Otherwise, you should keep quiet. It would do wonders for our politics if everybody followed my system.
My question is for my children watching at home today and the children in the audience. How should they look at stocks when every day in the media they see companies that have never made a dime in their life go IPO? they're dilutive, and they see a lot of very short-term spin. The cycle is getting shorter and shorter. How should they view stocks, and what's your message for them?
You don't have to really worry about, what's going on in IPOs or people making money. People win lotteries every day, but there's no reason to have that affect you at all. You shouldn't be jealous about it. I mean, it's great, if they want to do mathematically unsound things, and one of them occasionally gets lucky, and they put the one person on television in a million that contributed to the winnings with the big slice taken out for the state, don't get on there. It's nothing to worry about. Just all you have to do is figure out what makes sense, and you look at buying. When you buy a stock, you get yourself in the mental frame of mind that you're buying a business. And if you don't look at a quote on it for 5 years, that's fine. You don't get a quote on your farm every day or every week or every month. You don't get it on your apartment house if you own one. If you own a McDonald's franchise, you don't get a quote every day. You want to look at your stocks as businesses and think about their performance as businesses. Think about what you pay for them as you would think about buying a business, and let the rest of the world go its own way. You don't want to get into a stupid game just because it's available. And I'm going to say a little bit more about that close to the break. But with that, I'll turn it over to Charlie.
Yeah, well, I think that your children are right to look for people they can trust in dealing with stocks and bonds. Unfortunately, more than half the time, they will fail in a conventional answer. So they really have a hard problem. If you just listen to your elders, they'll lie to you and spread a lot of folly.
But they really have an easy problem.
What?
In the sense that American business as a whole is going to do fine over time. So the only way that they can...
But not the average client of a stockbroker.
Well, we'll get to that later. The stockbroker will do fine.
Yes, that's true.
Yeah, but they don't have to do that, and we can talk. Well, I'd rather address that just a little later. But you don't want to worry. You don't want to be. A lot of problems, Charlie would say, are caused by envy. You don't want to get envious of somebody who's won the lottery or bought an IPO that went up. You have to figure out what makes sense and follow your own course. Station 11.
Good afternoon. I'm Whitney Tilson, a shareholder from New York. My question is related to the ones asked earlier about job cuts. Perhaps the only thing that makes American workers angrier than layoffs is to shut down an operation entirely and move the jobs overseas. Ask anyone in Ohio or Michigan, and they'll tell you stories about companies that have been operating in those states for decades, benefiting from the educational system, infrastructure, and so forth, things that were paid for by local taxpayers. But then some high-paid consultants came along and showed the company how it could reduce its costs by relocating production to Mexico or China, and poof, the good U.S. jobs disappeared. My observation is that most investors and those in corporate America today worship at the altar of maximizing shareholder value, which is code for doing whatever is necessary to boost the share price as high as possible. But in doing so, companies are taking actions that make millions of workers feel at best fearful and left behind, and at worst deeply harmed by corporate America. It makes so many people so angry that I think it's testing the post-World War II economic order, which is rooted in free trade and even the strength of our democracy. I'd argue that it was decisive in our last election. So my question to you is, do you think that businesses should consider factors outside of pure economics when making these types of decisions? What obligations, if any, do they have to their employees and communities in which they operate? And lastly, if a Berkshire CEO came to you and asked for your approval to close a U.S. operation and relocate it overseas to save money, what questions would you ask beyond the economics of this decision? Thank you.
Yeah, well, the truth is that in certain cases, production that would otherwise, that formerly been in the United States has definitely been supplanted by production that comes from other parts of the world. Originally, I was there when Fruit of the Loom was called Union Underwear and bought by Graham Newman Corp. In 1955, I believe, and it was probably all domestic then. And the truth is, if it was all domestic now, it wouldn't exist. We had the same thing happened with Dexter's shoe, and it was a wonderful company and skilled workers. And in the end, if we sold the shoes at a price that yielded what they cost us, they were not competitive with shoes from around the world. Now, trade, I would argue, both ways, export, import, massive trade should be and is actually enormously beneficial, both the United States and the world. I mean, greater productivity will benefit the world in a general way. But to be roadkill, to be the textile worker in New Bedford that was put out of a job eventually, to be the shoe worker at Dexter was put out of work, it would be no fun to go through life and say, I'm doing this for the greater good, and so that shoes or underwear will sell for 5% less or something, and the American public will actually never know. So what you need is two things, in my view. You've got an enormously prosperous country. You've got almost $60,000 of GDP per capita. It's unbelievable. 6 times what it was when I was born in real terms. So we've got the prosperity, and that prosperity is enhanced by trade. We were only exporting 5% of our GDP back in 1970, and that's up, I think it's around 12% or something like that. Now, we are doing what we do best, but we need an educator-in-chief who, logically, the president, I don't mean this specific president, I mean any president that's been around for decades, has to be able to explain to the American public the overall benefits of essentially free trade. And then beyond that, we have to have policies that take care of the people that become the roadkill in the process, because it doesn't make any difference to me, as far as I'm concerned, if my life is miserable because I've been put out of business by something that's good for 320-some million people in some infinitesimal way, and it's messed up my life when I've tried to live it in a proper way. So we have got the resources to take care of those people. The investors I don't worry about. I wrote about this a few years ago. The investors can diversify their investments in such a way that overall trade probably benefits them and they don't get killed by a specific industry condition. But the worker, in many cases, can't do that. You're not going to retrain some 55-year-old worker in New Bedford who may not even speak English in our textile mill or something. I mean, if they get destroyed by something that's good for society, they get destroyed, unless government puts in some policies that takes care of people like that. And we've got a rich society that can do that, and we've got a society that will benefit by free trade, and I think we ought to try to hit both objectives of making sure that there is not roadkill, and that at the same time we get 320 million people get the benefits of free trade. Charlie?
Well, I don't quarrel with that, and we have unemployment insurance for that exact reason. But I'm afraid that a capitalist system is always going to hurt some people as it modifies and improves. There's no way to avoid it.
Yeah, well, capitalism is brutal to capital if you're in the wrong businesses. And like I say, you can diversify those results. Capitalism is brutal to people that have the bad luck to be skilled or have developed their skills for decades. But a very rich society can actually, if it's beneficial to society overall, it can take care of those people. I mean, it's just, the new tax, the bill that was passed a couple of days ago reduces my taxes, by 17%, and is that needed by the government or anything of the sort?
I wouldn't start spending the money.
No, but that was the will. I mean, no, I agree. I don't think. Who knows what happens with the bill? But I'm just to have that happen, and I don't think that. I think if you polled 1,000 people in Omaha that were walking through a shopping center as to whether my tax bill had been cut by some very large sum because of what passed, I don't think many people would have the faintest idea what happened there in terms of the coverage of it and all of that took place. So we do have. Probably more like $57,000 or $58,000 of GDP per capita. Family of 4, $230,000. But nobody should be roadkill in this sort of society.
Remember what Bismarck said? There are two things that nobody should have to watch. One is the making of sausage, and the other is the making of legislation.